Good evening, everyone. And good evening to our Sohar members as well, as the event is being telecasted live, especially for them. We have a thumbs up from them. Thank you. It gives me a great pleasure to welcome all of you for today's CP event, VAT for the oil and gas sector, for which I believe the timing would not have been better, considering the great ambiguity it had initially when the VAT was introduced in Oman. But before we go further, the motto of the Institute of Chartered Accountants of India, which literally means a person who is awake in those that sleep. It is a quotation from the Upanishads. It was given to the ICI at the time of its formation in 1949 by Shri Aurobindo as part of the Constitution's emblem. With this, may I request each one of you to stand up for the ICI motto song, please.
Yaesha sukteshu jagrati, Yaesha sukteshu jagrati, Kamam 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 kamursho, Pursho nirmimana, nirmimana, Tadeva shukram, Tadeva shukram, Brahma, Tad Brahma, Tadeva mritamuchyate, Tasmin lokaha, shataha, Sarve taduna, sarve kaschana, Etat dvaita, etat dvaita, etat dvaita, etat dvaita, etat dvaita, etat dvaita.
Thank you. The Muscat chapter always thrives to provide the platform for technical, non-technical, leadership, and cultural events from time to time, as well as opportunities to its members for professional development. We have conducted a number of physical and virtual events at Muscat, Sohar, Salala, and many more are in the process. We thank members for being engaging during these events, and the success would not have been without your active contribution. Further, as all of you know, India is celebrating its 75th year of independence this year as Azadi Ka Amrit Mahotsav. And although we had been away from our motherland, fir bhi dil hai Hindustani. In line with the unique celebrations expected across the globe, Muscat chapter will also be celebrating the event with the distribution of sweets and an event. So please stay tuned for further announcement soon in this regard. With this, I request our chairman, Mr. Sajeev Surendran, to come on the stage and address the audience.
Thank you, Gauravji. Warm good evening to senior members, past chairperson Mubin Khan. We welcome you to the 5th CP session of 15th Management Committee of ICA Muscat chapter. As you know, we are active with physical and virtual events since May by the 15th committee. We try to get the maximum feedback from the members to ensure the relevant topics to give value addition to the members in their professional and knowledge enrichment. As you know from the chapters, through chapters, WhatsApp groups and emails, we have circulated the Google Forms to get your feedback, to support us to plan an event relevant to the professional growth of the members. As you know, this year we have set up the three themes to ensure we do better this year. Three themes basically: the knowledge and skill set, the health and fitness, and the well being of the members. Under the first category, when we talk about the knowledge and the skill set of the members, students, and the local community. As far as the members is concerned, as I mentioned, we are very clear. We want to get active participation from the members and feedback from you to organize the relevant topics this year. All the efforts are there to identify the relevant topics and identify the good speakers to ensure we do value addition to your professional growth. As far as the skill set and technical enrichment of your career, we do have some plans, some certification programs, which is in the pipeline. Soon, this will come out probably a week or two. As part of the local community development, as you know, that's part of our MOU when we are here as a Chartered Accountants Association. When we are here, you know, the CBFS is our sponsor. As part of that MOU, the one important aspect is the support by CA community to the local community. We have initiated a program which is for the local CFOs and the local accountants. There are two programs, in fact, which is in association with, or probably under the guidance and leadership of Ministry of Commerce and Chamber of Commerce. That also will happen soon, which almost the inside work which is complete, which will happen probably from next month. The announcement will come. Apart from this knowledge value addition to the members, students, and the local community, I forgot to mention about one important thing for the students. The students, as you are aware now, even before also the articleship was possible, but now we have made it very clear. So what are the conditions associated with the articleship in Oman? And we want to promote our profession. We understand the challenge was, one of the challenge was the articleship being held in Oman, which is possible, which we want to promote by giving the information and the guidance to the members and students community. In that perspective, we are planning an event in association with Indian schools, that also in the pipeline, probably will happen end of October, November, which is in the initial stage. That is to ensure the more number of Indian students are taking up CA course in Oman. A couple of challenges. One of the major challenges was the articleship. Now, when you come to the second theme of the year, which is the health and fitness of the members, which probably we are working on certain aspects. One is the group life insurance to the members, which we have already contacted a couple of in the process. The discussions are going on. Probably will come to a conclusion maybe in a week or two. In these efforts, what we are expecting, the active contribution from or feedback from you to support us to make the CA membership in Oman as a brand building or brand privilege membership. It is not just a privilege. It's actually, in all aspects. Of course, our major objective is to enrich the knowledge of the members without diluting that objective. Yes, we are trying to do some more value addition to the members in Oman. Apart from there's some health and fitness activities which probably we are planning with the fitness companies. That also is happening. Then the last part was the well-being. Actively, there are some some proposals or some activities which is in the place. All these things probably in a month time it will come out. All these things without your support is not possible. So that is why continuously last 1 week or 10 days, if you look at in the group or emails, we are continuously giving you or reaching out to the members to give your feedbacks, inputs, contributions, supports. So we 8 members, we are working creatively to make the CA membership, CA chapter membership in Oman as a privilege membership, uh, primarily for the knowledge value addition than the other aspects. With this, move to the next important event which is going to happen in India, the World Congress of Accountants on 18th of November 2022 till 21st of November 2022. In order to have maximum number of participation from Oman, we have come up with a 50% discount, early bird discount till 15th of August. That already announced that the cost chapter will bear that cost. And as you know, we have already tentatively declared the date of international conference on 9th and 10th of December, which is going to be a physical event after 2 years, 3 years, which is happening after pandemic. So that is going to be, that has to be an event which is in uh, that size and form to ensure so we maintain our standard in all respect. These are the some points which I wanted to highlight. As you are aware, Sohar team also has joined today live along with us. It's the first time we have arranged, not here, they're in Salala, they're in Sohar, but they're watching us and they are with us. Thank you, Unmesh, for taking that effort to make it happen. So, one challenge or probably one limitation, or which is probably you can say it's not that great for us to see that the numbers are not in great numbers, probably turning for the event. That is one of the probably the short part which we have seen, but we have to work on that to ensure the maximum number of members are attending for the event. With this, I thank you for all your support, and I hand over to Gauravji. Thank you.
Thank you, Mr. Sajeev, for enlightening the members for the various initiatives being taken by the managing committee and the plans ahead. Any legislation is not perfect or does not remain perfect over the course of the time due to the constant changes taking place as a human reaction to the situations that they go through, be it social, emotional, physical, last but not the least, we can also say tax. Seeing it from a slightly different angle, actually each party has its own interest. The legislators want to make sure that any tax legislation provides the right approach, intent, equality, clarity, and certainty, and accordingly drafts the tax legislation in the best possible way. And also hiring the consultants, assisting them so that no loopholes are left. The taxpayers are most affected by this, as they think it takes more brains and efforts to understand and make out the real intent of the tax legislation rather than it does to actually earn the income. And since no one wants to pay more, they end up finding the loopholes within the same loopholes which the legislators spent sleepless nights to fill in. Not only this, the taxpayers also end up paying the consultants who had earlier assisted the legislators for finding and crubbing the loopholes. Lastly, the winner in all this then comes out to be the consultants who are benefiting from both the sides by filling the gaps and then finding the gaps for one party and the other party. Being a consultant, I don't see it is our fault because we work within the limitations imposed by the clients who appoint us, the legislators or the taxpayers. As I mentioned earlier, the timing of this event would not have been better considering the ambiguity it had at the time the VAT was introduced in Oman on 16th of April 2021. However, it was only earlier this year that a certain level of certainty was reached once the tax authorities issued taxpayer guide for the oil and gas sector on 6th of January 2022. To decode the VAT taxpayers guide for oil and gas, we are privileged to have amongst us CA Duseja, who is going to enlighten the members with the gaps the original legislation had and also taking into consideration the ambiguities that have been made to rest by the taxpayers guide. With this, may I request CA Sangeeta to formally welcome and introduce our speaker for the day, CAJ.
Thank you, CA Gauravji. It is my privilege to introduce our dear friend CA Jay Duseja. You all would agree that Jay is a very familiar name when it comes to VAT, not only in Oman, but all across GCC. He is a senior manager working with MMGS, specializing in VAT and excise tax, and have helped various conglomerates, oil and gas, retail, real estate, financial services, and automotive sectors in implementation, advisory, compliances, and litigation. By profession, Jay is a chartered accountant, Bachelor of Commerce, and has done GCC VAT diploma from ATT, UK. He is also a faculty member in Indirect Taxes Committee of ICAI for UAE VAT and Indian GST training, and have imparted trainings at various forums, including ICAI, Confederation of Indian Industry. He has 10 years of indirect tax experience across various countries, leading various VAT implementation, advisory assignments, including oil and gas, banks, exchange houses, and financial security brokers. He is a regular speaker in ICAI seminars and webinars in UAE, Oman, and India, and have provided corporate tax training to 50 plus companies in GCC. With this, I formally welcome on behalf of Muscat ICI chapter, CA Jay Duseja.
Thank you, Sangeeta ji, for the wonderful introduction. Good evening to all members. And thank you to ICI team for giving me opportunity to decode the VAT for oil and gas sector. So without taking your much time, I'll start with the topic. So today, as Gauravji mentioned, we are going to cover all the ambiguity which was there when VAT was introduced last year on 16 April 2021. What is the current status and what is still we have to achieve? What are the more gaps which we have to achieve in the coming years? So firstly, I'll quickly recap what has been done till now. Then I'll cover up the respective parts which are given in the oil and gas guide, explanation given by tax authorities. and what are the next action points which businesses must do in order to be more compliant than today. Before going into the VAT regulations, let us understand what does the different sectors of oil and gas mean. This was one of the queries by the members that what is the upstream sector, what is midstream. So let me explain you from the commercial point of view. The first segment is called upstream, wherein the extraction, drilling, or inspection or geological surveys are being done to find out the hydrocarbons. Up to this stage, it's called upstream, or which is also called primary activities in terms of VAT law regulations. Once the hydrocarbons are found, or drilled, or brought to the surface, then it is transported to the various locations. So the moment the hydrocarbons are brought on the surface, the midstream starts. So from transporting the crude oil, hydrocarbons to the various locations of the refinery companies, it's midstream. The moment crude oil reaches the locations of refineries or to the various companies, from that downstream starts. Then they refine the crude oil, they convert into the final products, petrol, diesel, oil additives, natural gas, LNG. So the moment it is reaching to the refinery, the third part is called downstream. And it continues to the sale of retail public or retail customer. So these are the three main areas on which we will focus in the entire session today. And the rules are different for the upstream and midstream, and it is different for downstream. So that's why it's key to understand these breakup of oil and gas sector. Further, in the guide, they have also explained the transportation services, how these will be also classified under upstream, midstream, and downstream. So same concept which I explained, if the transportation is done from the rig, that will be considered upstream. The transportation when it's from the surface, when the hydrocarbon is found, till the refinery, it will be considered midstream. And from the refinery onwards, till the petrol pump stations, it will be considered downstream. That's how even the transportation activity will be divided. Now, let us start from the law VAT perspective. When VAT was introduced on 16th April 2021, the provision is standard that all the supply of goods and services will be subject to 5%. Everything will be 5% unless there's a specific provision for exemption or zero rating. Then in Article 51, there was a specific provision for zero rating. 51 clause 7 mentioned supply of oil, oil derivatives and natural gas will be subject to zero rated if the conditions as given in the regulations are fulfilled. Now zero rating doesn't comes with a blanket approval. There are conditions attached to it. If the supply meets those conditions, zero rating allowed. Otherwise, it will be subject to 5%. Now, it is responsibility of supplier to decide whether these conditions are fulfilled or not. Because he is primarily responsible to discharge VAT on the supply as an agent of tax authority. So it is responsibility of supplier. This is the common scenario which we are seeing. Many times suppliers say, my customer asked me to do zero and I did zero. That is not correct. If there is any litigation, tax authority will not consider that as a valid ground. It will say you should have ensured that conditions are fulfilled. You cannot rely on what your customer says, or lack of knowledge is not an excuse. So it is key that supplier should ensure before charging 0% to any customer. Then when the regulations were published on 12th March, there was an Article 93 which elaborated 7 conditions that if you fulfill these 7 conditions, then zero rating can be done. Otherwise, it will be 5 as per standard article, Article 36. So company started reviewing those conditions. There were different interpretations. There were a couple of letters which was issued by MEM. So there was a major clause in Article 93 that supplier and customer must be licensed by MEM. Now, this condition was there theoretically in regulation, but practically there was no such kind of licensing, official licensing, which can be adopted as fulfillment of clause 3. So various discussions were going on whether MEM should introduce a new kind of licensing requirement or they can accept any current certification which is already there. So they had several meetings with tax authority and they came up with an idea, let us have JSRS certificate as fulfilling the condition of licensing. JSRS is a supplier portal. The full form is Joint Supplier Registration System, which is already there to enable suppliers to bid for the tenders or work for oil and gas companies. So they came up with this idea that let us have that as a certification condition. But there were some practical challenges in that it was not able to justify the usage. Now let's say there is a trading company. They have the JSRS certificate. Now they are supplying goods to oil and gas operator as well as they are supplying goods to normal manufacturing company. So just by having JSRS, it cannot be said that they are eligible for zero. So there was no proper mechanism to determine the one-to-one nexus of what the goods and services are being supplied. So then on 9th July 2021, MEM released a letter, it circulated to the vendors in oil and gas, that they are considering discussing with tax authority that JSRS should be adopted. Now this letter, it was taken in an aggressive way or I would say in a different way and many companies, they started asking their vendors to charge zero. That JSRS is a valid proof, you should charge. Then MEM again on 14th July, they released a letter that still that matter is under discussion. Don't rush for zero rate. At present, you pay 5% to your contractors and subcontractors. Don't reject their tax invoices. Otherwise, a huge amount of rejection was going on. Payments were not being made for a couple of months. Then, based on that letter, contractors started getting payments from the oil and gas operator. So it went up to December, January. Then in January, the guide was issued on 6th January, wherein it clarified how to fulfill the conditions of Article 93. Then now we will see in the coming slides what are the detailed conditions of Article 93, what are the examples they are given, and then we'll analyze few more scenarios, what would be the treatment based on the clarifications given by tax authority. All fine? Should we proceed? So just to capture what I spoke till now, I just bifurcated in terms of diagram. So crude oil, unrefined, domestic if it's sold, it will be zero rated, subject to the conditions of Article 93 on the right hand side. Export would be zero rated. Refined crude oil means petrol or diesel, domestic it will be 5%. If it's exported, it will be zero rated. Same rule applies to natural gas also. And additionally, in Oman, domestic supply of natural gas can be done only by MEM. So even the domestic supplies by MEM or to MEM are zero rated as per Article 93. So major focus which was there in the guide and the clarification was on the unrefined part, because refined was much more clear, domestic 5, export 0. So major clarifications were required on unrefined part. Now let us start with Article 93. There are total 7 conditions. If all these 7 are satisfied, then it will be 0. Otherwise, straightway it will be 5. So all the 7s are to be fulfilled. The first condition is very crucial and very subjective, which says that supply which are being made should be directly connected or related to the upstream and midstream sector only. Downstream, not eligible for 0. So it has been clarified in the first clause itself that it should be directly connected or related to the activities of primary and midstream, means upstream and midstream. I'll elaborate more on this, but this was the first clause. Second clause was supplier and customer, both must be taxable, which in short means both must be VAT registered. Now there were many cases wherein there were new companies, new operators or service agreements being made, wherein the company had just got the contract for exploration of the field. They were still not VAT registered, or they were still in the incorporation stage. So in that case, since they are not VAT registered, irrespective of other conditions, supplier has to charge 5% because customer is not VAT registered. Third condition was both the parties, supplier as well as customer, must have license from MEM. Now, this clause was the procedural clause which was not resolved earlier. So, through this guide, the tax authority and MEM jointly came up with a solution that for operators, MEM will prepare a list and they will submit to tax authority. Then companies whose names are there in that list will be assumed as operator. No need of further proof or licensing. This was for operator. And for the main contractor, they clarified that JSRS certificate is fulfilling the condition of clause 3, that they are certified by MEM. Then the fourth condition was the customer must also declare to their supplier that I am using these supplies for my midstream and upstream activities only. Because in the practical scenario or in the actual operations as a supplier, I am supplying goods, then I am not monitoring what use is being made by the customer. I cannot keep a track on that. So that's why a declaration from customer is necessary that he is also using only for upstream and midstream. Let's say he is supplying a generator. Now, after supplying, they may not know it is installed in the facilities of upstream or it is installed in the staff housing colony. Supplier cannot keep the track. So that's why the declaration is must from customer. Then there were 3 exceptions, 5, 6, 7, that these supplies cannot be zero rated under Article 93. It will be always subject to 5. The number 1 was any supplies for which customer is not eligible for input tax. Now this becomes little tricky and technical here. The logic behind this condition is, let's say the food and catering, on that VAT is not allowed to any company in Oman. So let's say if I'm ordering food for my office or for team, VAT on that company cannot claim. Now if this clause is not kept, companies will even zero rate that food and catering. Contractor will receive food and catering and they will charge 0 to operator. So it will miss the supply chain, and the food and catering, VAT on food and catering, which was supposed to become revenue to tax authority, will become input. So that's why they wanted to block the revenue on that, and they kept a clause that supplies on which customer is not eligible for input, that will not be zero rated. So there are basically 3 types of or categories of supply on which input tax is blocked. First one is food and catering. Second is motor vehicle, which is available for personal use. Now the words are available for personal use. Not necessary the person is actually using. Now how they determine available for personal use or not, based on audit or based in the other GCC regions, they ask various questions. Is the car being parked in the company premises? No, then person may use it for personal use. Who is driving the car? Is the driver or the person himself? Person himself, then it can be used for personal. If it's driven by a driver, not the actual employee, if employee asks driver, drop me home, will he drop him or will he say no? If the answer is yes, he will drop for sure. How can he say no to the employee? Then that moment it's personal. So even if it's a 1% personal use or available for personal use, then 100% input is blocked. And they have also defined what does motor vehicle means any passenger vehicle having capacity of less than 10 passenger. That will be considered motor vehicle, sedan car, saloon car, and on that input cannot be claimed. And third is entertainment expense. Now again you will think entertainment, but what does mean by entertainment? So that definition is not explained in the law, but taking the explanation given in UAE and other jurisdictions, any kind of expense which is pertaining to employee or any external party which ends in a personal consumption, let's say team lunch or any social gathering or annual iftars, sales event, gift given to any employee for good performance, those all will be considered entertainment. Input on that should not be claimed. So now supplier has to monitor that if I'm providing catering to my operator, I don't have to charge 0%. Now this becomes crucial because when we have contracts, it's a lump sum contract. In that, it's difficult to bifurcate how much is for pure services or goods, how much is for catering, how much is for motor vehicle given on rent. But the law says it is responsibility of supplier. If you will not pay 5% VAT on this, be ready to pay VAT with 1% per month additional tax. So that's why it's crucial that we see exceptions first, then we see the conditions. Then the next clause number 6 is any kind of event, restaurant services or any kind of cultural events, if those services are there which are performance based, on that also VAT should be 5%, not eligible for 0. And the 7th clause is if there's any exempt services like interest on any funding or residential rent, those will remain exempt. They will be not considered 0% under Article 93. So all these 7 conditions, once fulfilled, then you are eligible for 0. Now, why it is so complicated? Because these conditions, the first 3 are very subjective. Customers may say that this supply is related to my upstream. To give you an example, let's say insurance. An operator is taking fire insurance of the facility. Now he may say that this insurance is necessary for my activities, business activities. Please charge me 0, don't charge me VAT. Now, when it comes to supplier, when he sees the condition, clause 1, literal meaning, reading if he'll see, it must be related to supply. Okay, my customer is telling it is related, he is giving me declaration, everything is there, JSRS, VAT certificate, let me charge 0. But what tax authorities clarified in the guide, it should be one-to-one connected. Insurance is not one-to-one connected. It doesn't fulfill the condition number 1. It should be 5. Now, such kind of clarifications we will discuss in the coming slides, but these are also illustrative. It's not an exhaustive list. So every transaction we have to see, keeping in mind these 7 conditions. So this part we discussed, GSRS and MEM list. Now one of the query was there. I'll take up the queries along with the slides in interest of time. One of the query was how to get the list of MEM. So currently, MEM and tax authority have decided not to release this list in public. Now this is also little, I would say, a funny situation or a problematic situation, because in the law you are saying charge 0 to the companies whose name is there in the list, and there's no list. So how should I identify my customers or bifurcate my customers who are eligible for 0 or who are eligible for 5? So then the companies, they are giving assurance in their declaration. Now let's say PDO. Now we cannot assume that PDO's name will not be there in the list. If PDO's name is not there, then list itself doesn't exist. So now companies are relying on the declaration given by the operators that we are operators as per this clause, and MEM, they are giving confirmation to operators one-to-one that yes, your name is there in the list on the request of the operators. So that's how MEM list condition is fulfilled, but in public domain there is no list. So customers, they have to rely on the declaration from the supplier. And for the subcontractors, GSRS certificate is the licensing condition. Further, there is one important point which they clarified in the definition of operator. What they clarified is that there can be service agreement wherein an operator will appoint a service agent, service company to operate the entire field, small fields. In that case, going by the contract, commercially, that service company is a contractor. Operator would be the main company and the service agent will be contractor. They covered the contractor also as an operator. That if a service company is maintaining entire oil field on behalf of operator, consider them as also as a contractor. So this was consider them also as an operator. So operator definition includes two entities in nutshell: actual operator and service companies who are operating entire oil fields. Two parties. Then this guide came in January 2022. So there were again a ambiguity or a difficult situation. What about the work which is done already in 2021, but invoices yet to be raised, or invoices already done, payment not received? Will it be 0% from retrospective or prospective basis? So tax authority clarified that, and this position was also taken by most of the oil and gas operator for cooperation and the easiness in the system, that it will be applicable from the date we give you declaration. So various operators, they started giving declaration immediately after this guide. Couple of operators, they gave in Feb and March, but they were being relaxed with their contractors. The day we give you the declaration, from that date onwards, we will not accept invoice with 5%. Past, they accepted the invoices with 5%. And even tax authority clarified that operators cannot reject the invoices with 5% billing because they have an option to take refund. So they should not create the difficulty in the situation. They should accept the invoice, process the payment, and pay the VAT to the contractor. This was another important clarification in the guide. Then another point where they clarified that a written confirmation is must for every purchase order or for contract or for supply, that customer is using the supply of goods or services for upstream and midstream sector only. Sorry? So how they are clarified in the guide, for every purchase order, declaration should be given electronically or manually or any other document as necessary. So what companies are going, they are different companies are adopting different models. Some are going per contract order, so that because the invoicing will be for the same contract, so no need for per PO. Couple of companies are going with a standard note on every purchase order or invoicing. So both practices are being followed.
That case, what we do, because the purchase order states 5%, because the backup documents.
Correct.
But they give the declaration by 0%. But we cannot raise the invoice with 5% VAT because it is getting rejected as a no percent. So what will be the...
So for this scenario, ultimately we have to see the condition. If the conditions are satisfied, then issuing PO with 5% may be some technical error or system error. Then if your customer is saying that I will not accept with 5, he is right from technical point of view, but all the conditions must be fulfilled. If that is there, then you can raise a credit note with 5 or a fresh invoice with 0. So what I'll do, I'll quickly cover the different clarifications given by the tax authority, and then we'll open for the Q&A so that we get more time for the practical scenarios to discuss. So upstream activities we covered, different stages. Studies prior to declaration of commerciality, drilling, captive consumption, plants and facilities at rigs, operating, and exploration and drilling. These are basically activities of upstream. And this presentation will also be shared with member, so you can be relaxed, you can save your phone memory. Now, an important point which came up through guide. Till the time this guide was released, what was the interpretation or expectation in the industry? That entire supply chain of the oil and gas will be 0 rated. However, in this guide, they limited the 0 rating only to the first leg of oil and gas between operator and main contractor. So they specified any supply between operator and main contractor 0 rate, all other supply chains 5% straight away. So this was the biggest, I would say, shock or surprise when this guide came out. Because in the oil and gas industry, there are multiple levels, and at least first 2 levels are necessary because the main contractor, he usually subcontracts most of the work. So what happened is the refund which was earlier due up to December 2021, operators were in refund situation because when they were getting invoices for, let's say, goods or for services, they were paying fire to their contractor. Their output, crude oil, is zero. So they were into refund mode and they were having huge cash flow issues. After this clarification, the procurements of operator became zero. So their sales also zero output, procurement also zero. So they are into neutral situation, not in refund or maybe little refund or payable. Now, main contractor, he has to charge zero to his customer. Now he is mostly subcontracting to the vendors. That will be fine. So the contractors now have came into the refund mode. So that was the biggest, I would say, surprise to the main contractors because the payment terms also which were there with the contractors that they have to pay, and unfortunately, or I would say, as a standard practice in Oman, returns are quarterly. So they have to wait, and due date is 30th of end of quarter. So there will be 4 months delay in filing the return, and then there will be a refund process. So their money would be stuck for, let's say, bare minimum 6 months. In other countries, if you will see, there are different tax periods. There are monthly tax periods, there are quarterly, half yearly. Assessee can select based on their need. So like contractor, now they don't want to wait for 4 months to get an apply refund. They can opt for monthly. So in the Oman VAT law also, theoretically there is a provision that company can change their tax period, but practically it has not been implemented yet. Once this is implemented, many companies, I assume, will try to shift from quarterly to monthly so that they can file their refunds more often. So this was the clarification on the supply chain. Then tax authority also clarified on key points which are there in the oil and gas industry. Like one of the point was cash call. What will be the VAT treatment for cash calls? So tax authority explained that cash call is nothing but a funding request. Operator is requesting for money, then VAT treatment will depend what the other party gets in return of that payment. If it's only financing, then it is out of scope, no VAT to be applied. But if the operator is supplying something in return of that funding request, let's say crude oil, then zero rating will apply, which is applicable on those goods. If they are providing some services, support services, then it will be subject to 5. So they clarified cash call is nothing but a funding request. To determine VAT treatment, see what the other party is getting in return. Now, one of the crucial points which they have clarified in the guide is that if there are different scenarios other than supply of goods or services or funding in cash call, parties have to take approval from tax authority. Sorry. Prior approval is mandatory. This is again unique in Oman. So now if any operator, they want to have a unique cash call request or an agreement with their JV partner, they first have to approach tax authority, take the approval, clarify the VAT treatment, and then proceed for the cash call. Now we'll see one by one what are the examples which they have given. Just a minute. So firstly, they clarified government payments out of scope because government is getting money, they are not supplying anything, so it will be out of scope. Training levy, out of scope. Now again on this point, there's a confusion going in the industry. So there's 1.2% training levy fee, which you would be aware. Oil and gas operator deducts from the payment of contractor's invoice. Now, many companies, what they are considering that this training fee is reduction in the value of supply. So let's say if I'm supplying invoice of 10,000, I'm charging VAT on 10,000. Then company will deduct 1.2% and will settle the balance payment. So they are asking tax credit note on this 1.2 deduction also. But what tax authority has clarified, when an operator is deducting training levy fee, they are not making any supply against that deduction. They are just withholding money or receiving money. That is not a supply. It should be out of scope. So contractor will charge on 100. He will receive payment 98 after deduction of 1.2. Gas transportation tariff, 0 rated. Crude oil gas revenue, which we saw, 0 rated. EPSA overhead, any overhead which is agreed by the various parties of the operators and exploration agreement will be 0 rated. Disposal of material or inventory other than to the operator will be standard rated. Now this is again very cornering point which is being missed by oil and gas industry or various other industries, any financial service industry, let's say. They are discarding fixed assets, old furniture or car. They may think it's not a supply. We are not in the business of selling scrap. But once the company is VAT registered, they have to charge 5% even on the sale of fixed assets, scrap or inventory. So that tax authority clarified. Cash calls I discussed. If it's only a funding request, it will be out of scope. Recharges made will depend on the underlying expenses. If the, let's say, recharge is made for accommodation in Oman, then it will be 5%. If the recharge is for some services given to non-resident having benefit outside Oman, it will be 0%. So in recharges also, we straight away don't have to take 5 or 0. We have to bifurcate based on underlying expenses. Transactions between shareholders, again we have to see what is the underlying supply behind that transaction. If it's the product or service is 0 rated, like crude oil and natural gas, it will be 0. If it's standard goods, it will be subject to 5%. Then same examples, like any transportation through main line of transport, which is run by PDO, that will be 0 rated. Any amount which is deducted for QBA, that will be out of scope. Service charges relating to upstream, 0 rated. Miscellaneous revenue not related to the upstream activities will be standard rated. That is the important clarification. Now what they clarified another thing, that electricity or utilities supplied to operator will be directly by the operator would be 0 rated. Recharged, it will be 5. Then this part was critical. Now this slide is very relevant, through which they try to explain the nexus, that which supply can be considered one-to-one connected with upstream and midstream, or which will be general for overall of the company. So first thing they clarified, fuel, diesel, gas. If that is being procured for the operations, that will be subject to 5%. Electricity, 5%. Insurance cost, any kind of insurance. It can be fire insurance, it can be workman compensation insurance, liability insurance, or medical insurance for staff. It will be subject to 5%. Even though you are supplying to operator, you have JSRS, you have VAT certificate and all the other conditions, still 5%. 0, not allowed. Demurrage, they clarified it will be out of scope because that is compensatory in nature. It is being charged because the other party did not clear the goods in time. They have taken extra time. So it is a penalty in nature, not additional service rendered for which we are taking charges. So out of scope. Use of charges for any IP rights or trademarks, it will be 5. Transportation of workforce from field to the location or within the field will be subject to 5. Now again on this point, there were many arguments or different points that now these are being for rigs only. Without transportation, how the workforce will move within the field. So this should be 0%, but tax authority clarified it should be 5. It cannot be 0 rated. Then accommodation, camps, catering, recreation, give CSR activities, all these would be subject to 5%. Then they also clarified that, okay, we are asking contractor to charge 5% on catering. Whether operator would be able to claim or not, over there again they have given two scenarios. That if the site where the catering is given is remote location, where no other alternative exists, then claim input VAT on catering. But if there is an alternative resource available, it's not a remote location, then input cannot be claimed. Now again you will think nearby location means how many kilometers. So that is again not clarified, but it should be it's on the onus of supplier to prove. It should not happen that 5 kilometers is there and it is considered far away from the site. So generally it should be substantially far. Then it would be considered necessary that we cannot ask workforce to travel 50 kilometers and have food and come back. In that case, input should be allowed. Then any goods used for entertainment or motor vehicles, as I mentioned earlier, will be subject to 5%. I'll just quickly cover which are important. Now I have not spoken earlier in interest of time. Another thing which they clarified is any kind of recharges which are made by affiliate in Oman, like legal, IT, technical, engineering, those all would be subject to FI. And if it's procured from foreign affiliate, then it will be subject to reverse charge mechanism. Operator or the contractor whosoever is receiving, they have to make reverse charge services. And if you are receiving from local, then again same conditions of Article 93 we have to see. If all 7 are fulfilled, then 0. Any supply made within VAT group will be out of scope. Yeah. Then coming to the downstream. Downstream, it's pretty simple. By default, domestic, it will be 5. If it is being exported, refined oil or LNG, the company has to maintain export evidences, proof of export that goods have went outside Oman, then they would be eligible for 0%. Aviation fuel and marine fuel, 0 rated, but only for means of transport, means which are used for public transportation or for commercial use in case of airplane or trains or let's say buses. But the vehicles, let's say if it's a private jet or it's a cruise ship which is used for leisure purposes, fuel to those vessels would be 5. Now over there also they have kept the condition that supplier has to ensure that goods which are being vehicle which is used is not a leisure or means of leisure or pleasure purpose. That proof they have to retain before charging 0%. Now, till now we discussed domestic. Let us quickly cover import. Now, on import of goods in Oman, default rule is pay the VAT at custom, clear the goods, claim input VAT if eligible. Without paying, goods cannot be cleared. In case company wants to have a reverse charge mechanism or defer this VAT, postpone this VAT if I say in technical words, then they have to give a bank guarantee to tax authority with 1 year validity that I want to import the goods. Instead of paying in cash, take the bank guarantee, allow me to clear the goods. I will show in my VAT return output and input that I was supposed to pay and I am eligible to claim. So plus and minus, ultimately it will be 0. But this is on an approval basis. By default, pay and claim. All with me? Then import of services. Import of services, in that case, reverse charge mechanism is there. What does reverse charge mechanism means? As a standard practice or a mechanism, supplier has to charge, collect from customer. This is standard mechanism. Now in case supplier is non-resident, they cannot ask them to register and charge VAT. So they have made it reverse. Customer, you assume yourself as a supplier as well as customer. You discharge VAT in your VAT return, again by a debit credit entry. Output and input in the same return. Now this is also, I would say, common understanding that RCM is always debit credit, which is true in most cases, but not in all. So wherever companies are having exempt supply, they have to report output, but they cannot claim input. So RCM for oil and gas industry, mostly it will be output and input, JV kind of non-cash entry, but not necessary in almost all the sectors. Deferment of goods we covered. So the process, I will just quickly cover the process. The importer on record, they have to give bank guarantee to tax authority of the expected value of VAT which they are going to, for which they want to avail the facility for the year. Bank guarantee should be issued by local bank with 1 year validity. Once that application is made, tax authority will give a license number, postponement license number. They have to give this number while preparing the bayan to their clearing agents or their in-house logistic team. Once that bayan license number is fed into in the bayan system, goods will be cleared without VAT payment. And they have to report in their VAT return, input and output in box 4A and 6B. This is the mechanism. And every year, in order to avail this facility, importer has to renew or extend the bank guarantee. Exports from Oman. So, like when I discuss with any person, like they say 0% is very favorable for me. I don't have to charge, my customer is happy, exports are in all good, I get a good payment. So, but when audits happen or when we explain them the condition, that it is more difficult for you or onus on you to ensure export conditions are fulfilled. Because when tax authorities will come, zero rating would be the area, may it be the upstream, midstream area or this exports, wherein you have not deposited the revenue and they have a chance, if conditions are not fulfilled, to get revenue from that area. In case of fire, you have collected and paid, nothing to worry. But exports are more worrisome for you. So what the conditions they have given for export is, goods must leave within 90 days from the date of supply. If they don't leave, exit the Oman within 90 days, then zero rating, not allowed. Goods must leave the state in the same form and the condition. No modification should be made in the goods. Now, these rules are applicable for oil and gas as well as all the other industries also. Let's say automotive industry or wherein parts or tools industry. Now, you may supply car to a customer. Now, he may make a modification to an ambulance or some specialized vehicle or crane in oil and gas, and they may make some modifications in that crane or jumper. Once the modification is done, zero rating not allowed. There should be exit proof, which is customs bayan and the commercial document issued by logistic company. It can be bill of lading, it can be airway bill or certificate of shipment, depends by which means the goods are exited. So these proof are to be retained up to 10 years. Now, what's happening in other countries, let's say transaction is genuine, goods have actually existed in the same form within 90 days. However, when they start audit, the supplier is not having proof or customer has not submitted the evidence. So from tax law point of view, if there's no evidence, it is assumed as local sale. 5% plus 1% per month is due on that supply. Transportation can be done by customer or by supplier. No issues on that. So now let us quickly cover the entire VAT treatment on the supply chain of oil and gas through this chart, which is given by tax authority in their guide. So first leg, as I mentioned, between license operator and local contractor, where number 1 is mentioned, will be eligible for zero, subject to the conditions of Article 93. In first leg also, there will be 5% for exceptions, which we discussed. Second leg onwards, it will be always 5. We don't have to see any condition. They have JSRS or they don't have. It will be always subject to 5%. Imports. Imports made even by operator or main contractor, it will be always 5 for all the parties. So Article 93 only works on domestic supply. It is not applicable on imports. Only way to defer or postpone the VAT on import is bank guarantee route, which I mentioned. Services from outside Oman, reverse charge mechanism. So this is the entire supply chain which will be applicable for oil and gas industry. Downstream, as we discussed, aviation and marine fuel will be 0% if they are provided only to qualifying means of transport. To other vessels, it will be 5. Another important point which they clarified was date of supply for consignment or reserve stock. Now, this is applicable again for all the industries, even in retail and FMCG. So, what they clarified that if you are putting the goods to your customer's location or a specified location, though it is ownership is not transferred, it is a consignment, but customer has the power to dispose of. So commercially in consignment, when the customer takes out the stock, it becomes a sale. But for VAT, the day goods are placed at the customer's disposal, it is considered date of supply. And VAT is triggered on that. So if I'm placing 10,000 units, let's say to my consignment partner or customer, ownership is not transferred. It might transfer in bits and pieces, as and when he removes based on demand. But for VAT, I have to report this transaction with VAT in the date of at the date when the goods are placed at disposal itself. So again here, the companies they have to modify or change their accounting pattern to have a different due triggering point for VAT and different due dates for payment and ownership. So what are the points which business should do in order to follow or to be comply? First point, if there are any main contractors, are there any main contractors in this room making supplies to operators? 2, 3. So have you updated your JSRS certificate on VAT? So this is the first action point, that companies have to upload their JSRS certificate on VAT portal. That is point number 1. Second point, written confirmation. Many companies, they are not providing written confirmation, or they are just sending emails. At least if email is there, have a printout or save it in a record along with your invoices in order to fulfill the clause number 4 of Article 93. That is must. Second, you must issue a compliant tax invoice, especially on the receiving side. Now, as we discussed, a main contractor will be mostly in refund scenario. So they have to ensure that when they get it from their vendors, subcontractors, they receive a valid tax invoice. So till now, since it has been more than 1 year, 3 months, still we are seeing the tax invoices which are coming are not as per Article 144. Either the title is pro forma invoice, receipt, commercial invoice, name is not mentioned of the customer, VAT PIN is not mentioned, currency is in foreign, amount is in foreign currency, not mentioned in real. Those all points has to be checked before making an entry or before accepting the invoice from customer. It may sound a small point that why Jay is repeating or emphasizing so much on this. This results into denial of refunds at the time of refund assessment. After a year or after 6 months, once the vendor gets payment khalibali, no change invoice. We have given, now our part is done. So we have to ensure that all the invoices must be valid as per Article 144 and kept as record for 10 years. So that is when companies can have a checklist. They can inform to their AP team to thoroughly check, otherwise reject the invoices of the vendor. Then list of operators, as I mentioned, is not out yet. They may change their position and make it public soon. But till now, till then, you have to take confirmation from your customer. Then changes to ERP system. Now we discuss so many exceptions, that catering not allowed for 0, motor vehicle not allowed for 0, accommodation not allowed for 0. Now those things cannot be controlled by human. It has to be controlled through ERP also. It has to work hand in hand. Knowledge to the person is also required. A capable system is also required. So you have to make changes, put logics into your system so that it works as per the conditions of Article 93. So these are the action points which I would suggest. Then before opening the Q&A, I'll just in a minute, I'll cover the audit part and the refund part, how they are doing. There were a couple of queries. So what is the refund process? Now, once the return is filed, by the due date 30th of end of the quarter. Then there is a separate application tab, refund application tab on the portal. Companies, they have to apply over there with the taxpayer checklist, which is nothing but the transaction wise listing in Excel plus a list of questionnaire to ensure all the transactions are covered properly. That taxpayer checklist has to be uploaded along with 7 samples from each type of supply. Your 5% sales, 0% sales, procurement of 5%, capex. Every supply, 7 invoices are to be attached. Once invoices are attached on the portal, refund application is submitted. Then tax authority will assign an officer to your case. Now there are 2 departments in tax authority. One is normal refund department, one is large taxpayer and investigation department. How it is bifurcated between these two based on the amount as a first factor. If the refund amount is up to 50,000 real, it will go to normal refund department, wherein quick processing and macro level check would be done. If it's more than 50,000, it will go to large taxpayer, wherein thorough check would be done. This is first condition. There can be certain conditions on risk profile. Now, this major companies might not know. Tax authority have this analytical system where they can put the risk points to the companies, risk profile, high risk, low risk. So suppose in your first refund, if they find a much risk, that input is claimed wrongly without tax invoices, they may highlight your company profile as high risk. Then even if you will go for refund of 10,000, it will go to the investigation department. So that is step number 2, officer will be assigned. Then officer will review the invoices. They may ask more invoices. They will call the company representative if any explanations are needed. If everything is satisfactory, then they will approve the refund. And the good part is in Oman, like which in other countries we are seeing, even after approval, the payment processing takes time. But in Oman, payment processing is quick till now what we have seen. Once it is approved, within 10 days, it gets credited into the bank account of the company. So this is in a nutshell the refund process. Even in taxpayer guide of financial services, tax authority have given the timeline of 45 working days of granting the refund from the application date, subject to all the documents are proper with the company. This was on refund. The next query was whether VAT assessments have started. Yes, many VAT assessments have started. In most of the cases, what we saw, even company was not aware that they have got the VAT assessment notice. So what you need to do regularly, let's say monthly or fortnightly, there's a correspondence tab in the tax portal. You must check that regularly, that is there any notice sent by tax authority by portal or by post box. Many companies they have received in October, they have still not checked that, and now they are getting emails that your 30 days are over of VAT assessment. So they give 30 days to submit the documents for VAT assessment. This is already closed. Now we may do our best judgment assessment or liability of that company. So do check your correspondence tab regularly for any notices which might have been sent, or update your business profile, proper PO box number and the email ID so that you receive in the correct mailbox. So that was all updates which I wanted to share. Happy to answer any questions. No, so unless you file the refund application, it is not considered as a refund scenario. So there are 2 options which you are doing carry forward, which they call
Yeah,
it.
carry forward is
Yeah. So by default, it will be carry forward
correct.
unless you file the refund application. So it will not be considered refund application by merely filing refund.
So whatever
refund
VAT
return.
input I'm carrying forward, I can set off against the liability of the next quarter.
Yes, you have 5 years to continue carry forwarding the return. After 5 years, it will lapse.
Okay, thanks.
Yeah.
Thanks.
Right, thank
Yeah.
you for clarifying those things. Actually, we are the operator of, we are the contractor. We are doing the contracting. We are doing most of the things is subcontracting only. So your first point is you are saying JSRS would be, I need to register on the VAT portal.
Your JSRS.
Okay.
Yes.
So that we did, and for each and every contract or PO, we need to have a written clarification from them.
Now 2 alternatives you can follow.
Okay.
One, going by core contract, one standard for all, or PO as a standard narration or description that this supply is being used for upstream and midstream. Whichever convenient commercially to both the parties can be followed.
Okay. And since actually there are 3 times there is a change. First time we assume, okay, is 0%.
Yeah.
Then they came up with the 5%. and now they came up with the 0%
Yeah.
again. So when they came up last time with the 5%, so what we did just have a communication with them, and then we routed through debit note, credit note thing,
Yeah.
and then again, so after the notification from them, some of the clients, so we just changed it again. Now the point is that now the onus is on us to claim the refund.
Yes.
Right. So since you means most of the things I am agreed. The only thing which you raised that the fuel which I am spending. Let's say I have some machines which are doing the servicing of those things. So fuel on that which I am putting a fuel for this basically upstream work. So for that I need to charge 5%
Yes.
VAT.
Yes. So in para 5.8 of the taxpayer guide, serial number 1, they have clarified this.
Means how,
That
and
it
if
will be
they say
subject to
that
standard rating.
because for them it is very clear that food, entertainment, those things are very clear for
Yeah.
them. But rest of the things they said why we would accept those means 5% and all.
So over there, what they have, I'm just guessing the logic of why they have kept this as a standard rated, because in those fuel also they might not be clear of the actual usage of the upstream and midstream. Though commercially we may substantiate that it is being used for a equipment or a generator which is on the site itself. However, to keep it simple from their side, they have kept it standard rated, and they have clarified in the same para that it's not that it becoming cost to the operator. For them anyways they can claim input. So wherever it's very clear direct nexus is there, you charge 0 as per article 93. These can be subjective. So that's why they are recommending, or they are saying charge 5% on this. So in that serial number 1, they suggest clarified 5% for fuel.
And there is also one scenario we are giving some kind of means I can say equipment to them which we are buying, let's say from locally, and we are paying 5% on that. And since we are paying 5% on that, and we are putting our little margin, and then we are supplying to them. So for that 0% is okay, or I need to
This
charge
equipment
5%.
is necessary for conducting the activities.
Correct.
Then it will be 0. So your procurement, irrespective of what rate your procurement supplier charges, if it's meeting article 93, you have to charge 0. So to give you example, let's say your vendor is unregistered. Just taking example, he will not charge you VAT. But you have to consider this, your supply is 0 rated, not out of scope. So you have to detach both the transactions. You have to see when you are making sales from your angle, meeting article 93. When you are procuring, vendor should ideally charge 5. If he's not charging, then maybe different scenarios like he's unregistered or lack of knowledge.
When you say food and accommodation, so can I bifurcate that invoice? Because accommodation in any case it is not written. It is written that food and catering services.
Accommodation is there, serial number 8.
So I can't bifurcate.
No.
Okay.
Even though you will bifurcate, on accommodation also it's 5%, food is also 5. So you raise one invoice or bifurcate, both are same.
Okay. Thank you.
Yeah.
I have one doubt, but which is not related to oil and gas.
We can have
Okay,
it out.
thank you.
One to one.
So for that, if we have to charge for the cars we supply for the midstream activities for the 5% according to this.
So these cars are saloon cars, sedan cars, up to 10% capacity.
These cars are not sedan. It's a 6-cylinder vehicles. It is like Prado or whatever it is. But these are used for midstream pipeline inspection activities.
Okay, and these vehicles, when other than inspection, are they being used for other use?
Generally, they are not allowed.
Sorry?
Generally, they are not allowed.
Okay.
Because we have a policy where the employees are not allowed. But yes, from accommodation to the midstream activities into the field, they take the vehicles.
That part they may consider personal. Now, why they have blocked certain inputs like motor vehicle 1? Because these are very subjective. I may say it's fully commercial. Tax authority may say no, there's a personal element. So that's why they don't want to go into much litigation. Specifically, they have blocked it from input. In case company wants to claim, then they have to justify. Yeah, in your output. Yes. So in that case, again, you have to see the condition of input tax deduction. So when you are supplying to your operator, now operator, this vehicle, he may say that it's used for personal also. Your team, vendor's team or operator's team, it can be any. Then it will not qualify as per clause 5 of article 93. So that's why for motor vehicle, they have said You charge 5% to your operator. Let your operator decide that am I eligible to claim or not. So when you are billing 5%, operator will analyze condition of 56, that is this car being 100% used for commercial business. If they can prove, they will claim, otherwise blocked. So it's, I think, serial number 9 or 10 in para 5.8.
Yeah, the next question is from Sohar team Vijay. A very important question from a chartered accountant. Any interest is allowed in refunds?
Sorry?
Any interest is allowed on the refunds?
I wish it was. So accommodation also, they have to see the location, that if it's remote location. And basically in accommodation also what happens, long-term residentials are already exempted. Only the short-term lettings are subject to fire, this temporary houses or this. On that, if it's remote location, they will claim input, otherwise it will be blocked. They can take a private clarification. Now, good point I forgot to share with you. Now, we were saying that still there are many loopholes or ambiguities to be closed. So what is the best way? Because if you'll if you'll take your internal opinion or you'll take opinion from consultants, experts, still that is subject to their view. Even the points which I covered, these all are my view or clarified in guide. In the guide itself, tax authority has also mentioned disclaimer that these are their view. They may be correct, they may not be. Parties have to take their own professional advice or interpretation. So what is the best way to mitigate? There's a process of tax ruling, still not made publicly, but tax authorities are responding. You can apply with application which is similar to advanced ruling in India. Luckily, it is free here. In India, it's much costly. So you can approach them with your scenarios, facts, and seek that. My view is 5. Let's taking example of motor vehicles, which we are discussing. Is the view correct, or you want us to charge 0, or vice versa? That will be binding on both the parties, provided facts are clearly communicated to them. Actual usage supported by documents. So that companies can explore to take a private clarification and mitigate the future risk.
Okay, next one is from Deepak Gupta from Sohar team again. Can you explain more on remote location? It has to do anything with urban or suburban area?
Now that they have not explained what is urban or, now in the guide also they are using normal words. Now actual guides they are preparing in Arabic, then they are translating into English. So exact definition has not been given, but what we have seen in the other countries, like in UAE, we applied for clarification for one of our client, wherein 50-kilometer radius was considered remote or not remote from the site. Now that was also other country. In Oman, no exact kilometer range or limit is given.
Okay. So one more is, I'm not sure this question, provision for discount volume or otherwise is output tax to be reversed, or the discount can be done by a non-tax credit note?
No, for discount, there are 2 rules. If it's a return of goods, then it should be within 3 months. If it's a cash discount, volume discount, then if the original invoice is with 5%, then tax credit note can also be with 5%. But there's a condition that there should be a return policy for discount. So impromptu discounts given, it will not be reversed with VAT. It will be out of scope. Normal credit note will work.
Okay. Yeah. One from John Sucharia. Explain more on assessment procedure.
So assessment procedures, as I mentioned, now this is different from refund assessment. It will be a normal audit. If tax, now currently what I observed, they are selecting key players from each industry. Same pattern was followed by other jurisdictions. So that they do audit of, let's say, one company, oil and gas. Tax authority will also have learnings, what is being wrong done in them. They can easily find the same in other companies. So mostly now they are being started for major industries, key players. And again, there's no time limit for how, when it will be completed or what is the criteria. All depends upon the selection of tax authority. There's a separate team of VAT assessment, which officer will be assigned. They will ask you same taxpayer checklist as a first step with sample, and then he can have further audit. That is proper assessment. And tax authority has 10 years to do this, and they can do multiple time assessment. Let's say your company's 2021 is done. After 3 years, again they can do 2021. So it's not like once done over. They can select for quarter also. So in one of the case we saw they have selected all 3 quarters of 2021. In some company they have selected only Q2 or Q3.
Be addressed to the Director General of Customs or Tax
Tax
Authority?
Authority.
Tax Authority.
Yeah. Custom is just a party to the transaction. Guarantee must be to tax authority. No, format banks are adopting their own. There's no fixed format of bank guarantee. Major requirement should come is that this bank guarantee is addressed to tax authority for availing postponement facility. Then different banks are using their own formats.
So now I have a couple of questions which are more principle based. Is that whenever I import goods or purchase goods, I take VAT input. When I sell it, either with the value addition or as it is, I can claim VAT, I have to discharge VAT liability on that.
Okay.
Now let's say, being a trading organization, you can have wastages, expired stocks, your customers returning the stocks for bad quality or whatever, or damages in transit. Then on such a stock, wherein at the time of purchase we have claimed the VAT input, should we be required to reverse it?
So there's a provision.
Or what is the classification of what wastage can be allowed or what wastage we have to consider for VAT reversal?
Yeah. So for this kind of scenarios, wastage, damage, or theft, there's a process that you have to apply to tax authority for inspection within 30 days of that event, damage, theft, or faulty material. Tax authority will come for inspection. If they are satisfied, you don't have to reverse. If they are not satisfied or you have not applied, let's say, you're not taken their prior approval, then you have to reverse your input VAT also.
So means their inspection only can authenticate the taking of
Yes.
Utilization of credit,
Yes.
otherwise it has to be reversed.
Yes.
There's nothing, no other alternative mechanism or any.
Without approval, you cannot retain input tax with you. You have to. Now, unfortunately, in the entire VAT law, the provisions are designed in that way that within this much days, tax authority will give the order. Otherwise, assume reject it.
Otherwise?
Assume reject it.
Okay.
So if they apply for inspection, tax authority do not come, or they do not give you any approval, assume your request is rejected. So this is it. There in all the procedures.
Are you aware out of practical experience that the authorities have been, intimation has been given by the assessee and the tax authorities have visited?
In one case we submitted and it was a high value. Luckily it was fire case which was there. So goods were retained. We called them and they came, they visited and they gave okay not to be reversed. This was the one case I saw. But just to share with you example of Bahrain, what they do, over there they ask the certificate from external party also. Because in retail industry, there's a common theft and all, yearly 2% or 1%. So this criteria is not exclusively written in Oman VAT law, but in such cases, they may ask you certificate from auditor or internal auditor to substantiate this is a genuine loss or theft.
Now,
Then you can, now insurance also, it depends on policy whether they cover only the cost of goods or they cover the VAT also. Depends on your policy. I'm not sure exactly how the policy coverage is there. But if in that case also, if you already claimed input, either you have to pay back or you have to retain with you. You cannot ask insurance company to pay back to you.
now there is a general tendency by the customers that whatever adjustments, whatever services, discounts or any services they may have offered, they simply deduct from your payments. And wherein the VAT law requires that whosoever is supplying the services, he should necessarily issue you a tax invoice. At times, the customer is being a small trader or means not having that sort of mechanism and systems to provide you a tax invoice. There is some concept of buyer-generated tax invoice.
Self-billing agreement.
For that necessarily, should there be an agreement with that customer or we can issue it? And do the compliance.
So for that also, that is called self-billing agreement or a buyer issue tax invoice in a common parlance. But for that also, you have to take first permission from tax authority. Once they approve, then you as a customer can issue tax invoice to yourself. Otherwise, no. So the person who issues tax invoice, they can only reverse by tax credit note or make addition by a tax debit note. Customer from their end, they cannot do. So in AP side, you are just a receiver. You receive a check in form of tax invoice and cash it as an input tax. You cannot make changes on the check by your side. It has to be done by supplier. Yeah, you need not to reverse. Tax credit note is must to be issued for reverse. Supplier, yeah. Yeah, self-billing, but in UAE approval is not required. You can simply have a arrangement or agreement with the party and start issuing by yourself. But here approval is mandatory. Tax authority.
Okay, in the initial phases, there were some instances wherein instead of the customer giving us a goods return note, or we issuing a tax credit note to the customer for the return, it was simply a correction done on the invoice. We have booked the sales as per whatever has been accepted by the customer. The customer has accordingly paid us, but there is no exchange of documents, as per the requirement of VAT law, like we issuing a tax credit note for that particular transaction. I'm now going back to regularize it. It just happened, but is there a mechanism, or will the deduction of means the short payment that is being done by the customer, which can be taken as a acknowledgement or confirmation of the return of goods, because of which the payment was done less as compared to the original invoice?
Now, this depends on situation to situation. Let's say now you have given invoice for 100. Correct me if I understood your facts correctly. You issued invoice for 100. Let's say goods of 20 are returned. So ideally it should be 80, but you kept the tax invoice at 100 and received payment of 80. Am I correct?
Correct.
So now in that case, ideally for 20 tax credit note should be issued, because when you issued for 100, he would have claimed input also of 100. Now that you are not aware, you may not monitor.
Correct.
So it has become revenue neutral situation for tax authority. You charge output of 100 and he claimed input of 100.
No, but I claimed, means I reversed the output of 20.
Then you should issue tax credit note. Without proper document, you cannot adjust into your return internally. So
Okay.
compulsory a document must be issued for collecting or for reversing.
Okay, if it is just generated and kept in records, would that not suffice?
Should be supplied to customer.
It needs to be acknowledged and
Send to customer. You may email them. Not necessary that you have to take a receipt.
sign and stamp is not required?
If it's computer generated through system, electronic, that is also fine. Mandatory physical stamp, not mandatory.
No,
Oh, manual stamp.
that tax credit note I can generate in my system and
You have to
keep
deliver to also them.
deliver also. Now, what is the proof of the delivery that is required to be
Email,
maintained?
post box, you have handed over to post office. From your side, you have to justify action.
Email is okay? Email is acceptable?
Email is fine.
Okay, fine.
Yeah, it should be.
Okay, thanks.
Annual import, say 10 million, 500,000 bank guarantee is given to postpone, defer the payment, VAT payment. Suppose the third quarter, so already imported 10 million, and further import is happening for the fourth quarter. So should we do additional guarantee?
Yeah, so their system, on this, their system is tracking. So it is linked with custom. The moment import happens, there's a transaction which is passed from custom to tax authorities portal. And your bank guarantee value keeps on reducing. So at Q3, your value free amount would be showing 0. Then when you will try to clear under postponement, it will show error. You have to pay in cash.
Okay, another scenario, see now, end of the year, company decides to import a rig of 25 million, which was not planned, and guarantee was not given. And this is meant for another 10 years of use, or probably 20 years of use. And the guarantee you mentioned, it's 1 year. So that will be enough?
Now it depends if they have, because generally rigs and all we are seeing, these are high value.
Yeah.
So if they have facility, at least they should apply 2 to 3 weeks before, 1 month on a ideal side. If they have facility, they should take bank guarantee and they should apply for postponement. In that also, what many companies they can
No,
do.
what I was asking, the 1 year guarantee for the high value rig import is that otherwise we know that it's 4 quarters.
Over there, we can take a special. Ideally, they are asking 1 year for all standard. But in this case, we may request them to grant us for 4 months, because within 4 months you will file the return. The quarter in which you will import rig, by 3 months you will file the return. Then bank guarantee reversal would be already done. So in those special cases, we can approach to tax authority and seek a bank guarantee for shorter period, but still on their approval by standard or based on their system configuration. If it's less than 1 year, postponement doesn't works properly. It shows error in the bank portal.
So there are one question from Madhukar from Sohar. The logic out of scope on demurrage is applied to other sectors also?
Yes. So now these guides, there are many points where they are clarifying in the oil and gas guide, but if the same facts are there in the other industries, same treatment can be adopted. But the point is facts should be mentioned, because in many cases they are termed as a demurrage, but in actual these are service charges for leasing out the space. If you want 3 days extra, 5 days extra, this will be per day rate. So just by nomenclature, VAT treatment should not be adopted. Facts should match.
I think we'll take the last question. Tax authority have any plan to bring annual return process audited by taxpayer auditors?
Sorry, I couldn't get this.
Probably the annual audit by the tax audit kind of concept.
That has already started. Now they can select annual or they can select quarterly. All at the
No, I think in some jurisdictions, there is a provision that a certification from an auditor is
yeah,
required.
that becomes an internal process. Like in India, in Caro, there is one certain clauses which are to be written that companies compliant from GST point of view of this. Then they appoint a separate auditor to do a health check or an internal audit that all the things are being done correctly. In Oman, that is not mandatory as of now, but we are seeing in many SEOGs companies, this has become an internal requirement to have a check before the auditor signs the report.
This is last question.
Yeah. Sure.
See, the first thing is, what is the criteria for determining whether the place is a remote location or a non-remote location? Let's take a classic example. Since you have been to the other Gulf countries, I believe you have been to Kuwait anytime.
No, not till now.
Okay, it will be difficult for me over there. Or let's take another
Or
classic
at least I can answer
Okay.
to my best. If
Suppose, like, let's take it within Oman itself over here. There's a place called Mukhais now, which is somewhere interior, closer to Salalah, that side, which is a PDO site over there. We know that it is a dry and a remote location. You don't have anything. You have to depend on whatever they serve it to you for catering, that you can take the input VAT and claim on it. The other one is you have a refineries over here in the heart of the city also. You take your car in 10 minutes, you are in the best of the restaurant. How do you discriminate between these two?
So if within 10 minutes you can reach to the alternative source, then it is not considered remote or a distance location, 5%. The area which you mentioned near Salala, that at least we can justify that it is far from the urban location, it will be remote. And even what the words they have used in guide is that catering is provided to employee. They use the word, I exactly forgot, but the meaning says it should be for the health nutrition of the employees, and no other alternative exists. So if you say I can drive 10 minutes, alternative exists, then 0% not allowed.
So within the accommodation area, whatever they provide to you, that caterer comes and prepares the food for you, that you have to be dependent on that. Otherwise, you have to go hungry.
Yeah, in the remote location, yes. And that also the word which I am saying now.
And the other thing is, other question is, like, regarding the exports, as you said, that within 90 days the goods have to move. Suppose there's a lockdown due to COVID or some other reason like that, and the goods are not able to move out because of the complete stoppage like that. This blockage period of 1 month or 2 months, can that be discounted from the 90 days calculation?
So now in Oman VAT law, there are many things like which you mentioned. On that, there is no express provision. What to be done if not done in 90. So on those cases, the best method is to approach tax authority, explain the case, and take their concurrence or exception from the normal default rule. That is the way. In the law, they are not mentioned that what if not 90, extension is there. Like in UAE, they are given it can be extended for more 90 days on pre-approval. But in Oman, we don't have express provision. For any provision like this one, the best way is to approach tax authority. And the good part in Oman is we can physically meet them. We can visit their office and discuss. In UAE, it's all digital. Nobody is allowed to visit tax authority's office. So over there is no human touch. Here at least you have human physical meetings. You can explain your points and take exception. If you think I will require 5 months more, it's a customized order or make to order. Explain your case. Take extension as necessary.
I think for the remote location, we can show them the Talaba. There is no delivery option. So
Yeah.
that's a remote one.
In one of the cases, like few months before, there was a case of non-resident. So even the officer in front of me itself, he searched the company's name to check is it available, is their office there in Oman or not in Google Maps. So they can check the location also in that.
Yeah, the last one from Shaz, he's in trading from Sohab. Can an operator be charged VAT on QBA by PDO?
No, QBA was mentioned zero rated here. Let me. Yeah, QBA out of scope. Sorry, not 5%. It's out of scope. So VAT will not be there. PDO will not charge VAT.
Okay. Okay, thanks. So any more questions? Now he's going to charge
I am
you.
fine if all members are
After
fine.
this question, he's going to charge you.
That's my last one. Is there a requirement to have a one-to-one correlation between the input and output? Let's say I import and discharge, claim the VAT input on that, and I export as it is. So export, I'll not be charging, but since I have paid at the time of import, can I claim it? Only thing is that my worry is that whatever you are claiming input against, you should also be having a liability for that case. If that's not the case, then maybe your input and output cannot be, that input cannot be justified to be taken.
So the general principle is to claim input, there should be output, either 5% or 0%. So in export, there is actually VAT, but which is zero. So you are making a taxable supply and it's fully fungible. Like you don't have to connect one-to-one unless you are into exempt business, then you have to maintain the one-to-one usage. Otherwise, in general business scenario, you may buy goods, you may export half, you may sell local, you can claim full input. One-to-one relation not required.
Yeah, we have only two ladies sitting in the room, so we have to give the last question to her.
Sir, regarding this deferment of VAT, the security bank guarantee, how it will be calculated? Means on the based of average of each quarter, means how many quarters we should consider?
So standard, what they have mentioned is it should be annual VAT. So whatever
Means
you
last 12 months. 12 months means like how many quarters in last 12 months?
it can be your expected also
Okay.
or past. So it's upon company. Let's say
Okay.
I estimate that my possible VAT for next 12 months would be let's say 400,000.
Okay.
So I can give bank guarantee of 400,000,
Okay.
less amount also or higher, keeping a little buffer.
Okay.
Facility will work up to that limit.
Okay. And then how we'll come to know how much we utilized at customs?
So currently in the portal, it is showing free amount. So once your application is approved, if you'll go to that tab VAT postponement.
Means in that e-services?
Yes,
we'll be able to
e-services, I think it's number 4 or 5, VAT postponement. On that, if you'll click, you will see a free amount. So let's say you're given bank guarantee of 100,000. If it's showing free 80, then you have utilized 20.
Okay, so it should match with our records. Means what?
Ideally, yes, but in some cases we saw it is going into negative also. I don't know how, but ideally, yes.
Okay, so should we keep on checking, or like once an urgent shipment is coming and it's not available, at that time we have to upgrade our bank guarantee? Or
Yes,
what?
you can amend or extend. So ideally, every first of the month you can check your portal,
Okay.
so that at least you can inform your AP team that now we have limit of 20. Then they can share, are they planning to import more? So that in that time you can discuss with your bank and get the BG amended.
Okay, thanks.
Thank you.
Thank you, everyone. I hope I made your time worth.
Thank you, CA Duseja. It has been a wonderful evening explaining ins and outs of the VAT in the oil and gas sector. Now, may I ask our past dynamic chairman, Mr. Mubin Khan, to facilitate CAJ.
Thank you. Thank you to the entire ICI team and all the members.
Now, may I ask CA Jim to come on the stage and give a formal vote of thanks.
Thank you, Gauravji. Good evening to all. One very positive thing I noticed is that nobody left the hall during the presentation. Credit goes to Jay. It was a very mature presentation. Even you made the VAT very simple, explained the things in a very simple way. Thank you very much to you. Thanks to everybody joined today. We are expecting same participation in the future events also. Thanks to the Sohar team. Thanks to Unmesh and team for bringing the things together. Thanks to Nagesh. Thanks to CBFS team. Thank you. Thank you, everyone. Good night. Good night.
I will ensure it remains 30 seconds. Our next event will be on 70 years of Indian independence, 5 days from now. 75th. Oh, 75th year of independence. It will be a virtual event, of course, with the distribution of sweets in the morning, and the event is in the evening. So we welcome you in that event. And please do share the feedback. You can scan the barcode and submit your feedbacks. Thank you very much. Have a lovely good night.